Hey guys, Stock Saturday, and I'm recording this slightly ahead of time. Friday night, market has just closed, and yeah, it's been a pretty good week. 3.6% up, about 60 grand. So very, very happy with that, especially considering S&P is ever so slightly down. You'd call that flat, really. Minus 0.06%, and the Nasdaq is ever so slightly worse, 0.34% down. But down is down, and yeah, I've done reasonably well this week, mainly well off the back of all sorts really. Looking at the sort of percentage gains, gold and silver have been doing sort of reasonably well, extremely volatile. Kerr Mining has sort of finished with a good week. Equinox Gold hasn't, 13.15%, which I will come to. Yeah, some of the others sort of very much up and down. BlackRock, TSMC, they sort of put in a good week for most of the semiconductors. American Tower and Alexandria sort of doing quite strongly. The REITs. And yeah, some other bits and pieces which I will come back to. But one of the first of earnings season, and a very important one for me, and I would imagine for rather a lot of people in sort of stocks doing well at the moment. Semiconductors, sort of pretty much everything is largely affected by TSMC, and they've released a very strong earnings update for Q4. So looking at their balance sheet first, they will show this first. It's looking incredibly strong. Cash is up 2.47 trillion new Taiwan dollars to 2.767. So very, very strong, sort of over 10% gain in cash, which is good. Long-term investments up again, and property, plant and equipment I sort of keep a beady eye on. And yeah, we've got up from just under 3.5 trillion to 3.69 trillion. So very strong, up 14% year on year in property, plant and equipment. So this is partly the Arizona and sort of other US fabs. So yeah, going pretty well, and they're always sort of extending and upgrading things, and they have said a capex budget of 54 billion US dollars for next year. So yeah, extremely strong. So the total property, plant and equipment 117 billion US dollars. They're saying they're going to spend 54 billion in capex next year. So, or this year really. So yeah, very, very strong. Looking at liabilities, we've got the current portion of bonds up from 76 billion to 136 billion. So that's 137 billion. Quite a increase, but long-term bonds come down from 880 to 856. So yeah, overall debt is slightly up, but you know, cash is eclipsed that rise in debt, so all is well. Total liabilities sort of up slightly. We've got some other sort of current liabilities going slightly up, but I don't take too much of that. More sort of focus on the debt and cash and PPE. And then income statement, again, everything looking rather strong. Revenue up 20.5% from this quarter last year into the 1 trillion, into the trillion new Taiwan dollar range, 1.046. So very, very strong. Cost of revenue actually come down from last quarter, so that's quite incredible. Is down 10.7%, or no, it's up 10.7% from last year, but down 1.8% from last quarter. So very good. Operating expenses up or research and development is up 1.7% from previous quarter, and sales, general and administrative is down 2.9%, and sort of similarly on the yearly as well. R&D up 13%, sales, general and administrative down 20%. So with sort of strongly rising revenue, lower SG&A is extremely nice to see. Sort of total operating expenses have barely increased, so a lot of the gain in revenue goes down to the bottom line. They have income from operations, and then what would normally be sort of interest costs and financing costs and things are actually a gain for TSMC because they have so much cash. So yeah, you get profit before tax and then net income, and net income has risen to 48.3%, which is incredible really, and it's looking like there's potential for that to get to 50 in the next quarter, if not sort of maybe one of the quarters this year. So 505 billion on 1.046 trillion. Just coming over to their presentation as well, compared to the Q4 guidance. Basically everything has smashed it, surprisingly. Net revenue just slightly higher than the top end of guidance. Gross margin quite a bit above. They were forecasting 59 to 61% gross margin, coming at 62.3%. And operating margin 49 to 51 came in at 54%. They don't guide net profit, but 48.3% net profit. So net profit was almost as much as the guide for operating profit. And yeah, everything just looking rather nice. Shipments of wafers actually down slightly, so could be why cost of revenue was down. But yeah, increased revenue on slightly lower wafer shipments is, just due to higher prices. I don't think we get too worried about being slightly down on previous quarter. Year on year, wafer shipments still up 15.9%. So yeah, all looking good there. By technology, obviously we're getting 3 nanometer providing the bulk of the gain now, which is kind of expected. You were seeing 5 nanometer sort of providing quite a bit of the gain before, but 3 is starting to push on. That's basically HPC gains, high performance computing. This is compared to last quarter, so just 3 months ago. Everything's sort of a little bit volatile, but year on year you can see high performance computing up 48%, very strong. Smartphones doing reasonably well. Internet of Things actually being a small segment, that's up 15%. Automotive, small segment, is up 34%. And others and consumer electronics 0%. So no surprise there, but they're 3% between them, so don't really focus too much on that. This is sort of balance sheet we've basically covered, and yes, the first quarter guidance, they are projecting 34.6 to 35.8 billion in revenue, so compared to 33.73, that's very, very strong. And gross profit between 63 and 65, operating profit between 54 and 56. So again, both of those quite a bit higher than what they've achieved. Well, even what they've achieved here. So operating profit 54%, they're saying 54 to 56. And gross profit was 62.3, and they're saying an increase to 63 to 65. So, as I say, potential of net profit hitting 50%, if not, 49 and a bit. No real major events, just approving dividend and them sort of attending a seminar. So marvellous stuff from TSMC, and it's sort of trickled down to some of my other holdings, Applied Materials and Broadcom and people like that. Sort of did quite well off the back of this, and all your Nvidias and KLAs and Lam Research and things I don't hold have done pretty well. ASML doing well as well. So yeah, everyone seemed pretty happy with that. So a small bit of news, but from what is quite a large holding, or what I'm hoping is going to grow to be a large holding of mine. Hive Digital, they had been sort of largely focusing Bitcoin mining in Paraguay and the AI side sort of in Canada and a little bit in Europe. And they're now pushing the AI side, Buzz, into Paraguay. So sounds quite interesting. Paraguay sort of looking to integrate artificial intelligence for research institutions, enterprise, financial services firms, and healthcare providers. Quite surprised to sort of see all of that in Paraguay, being an emerging market. I believe they're classed as an emerging market. So yeah, good for them. And if it can do well for Hive, then all the better. So it's sort of a little bit up in the air as to where some of this is going, whether they're putting GPUs in facilities that could have been for Bitcoin mining. They sort of never really give 100% of the data, but they do sort of keep saying that HPC is higher margin than Bitcoin mining. So yeah, we may get a little bit more details of that going forward. But they have sort of said they want to get to 140 million. I sort of went over this last week. 140 million on the sort of conservative side by the end of the year in HPC revenue. So we'll see if this can help them towards that. So I've made quite a reasonable change in the portfolio, selling a fair amount of my Equinox Gold options, as well as a little bit of the stock as well, partly off the back, partly off the back of this. I had been sort of mentioning, and I sold a little bit before, just seeing a little bit more upside in B2 Gold than Equinox Gold, and then they come out with this week, the Q4 production numbers, not earnings just yet. That'll come next month, but 2025 production numbers, basically fourth quarter production numbers. We already had the rest of the year, and 2026 guidance, and they've sort of unsurprisingly delivered a record 922,827 ounces. They're expanding, so it's not really a surprise to get a record number of ounces. They've sort of been growing for quite a while. We had been sort of hoping for more than this a while ago, but that's what they've got to. Cash increased by 24% quarter over quarter, 430 million, and absorbing some one-time payments for legacy tax matters, so that's not great. And 75 million of debt repayment. I'd sort of hoped that they would have done a little bit more than that, but that's what they're, it seems, selling their Brazil operations for, to pay off a lot of the debt. I sort of made my thoughts clear about that last week. And there's not too much else here. Greenstone sort of improving, but not anywhere near 100%, and nowhere near what they said it was going to be originally. We sort of come to terms with that. Valentine, the Calibre mine, has hit commercial production on November the 18th, so sort of expecting 2024 to be 2026, to be a strong year for Valentine. That's sort of the bulk of the reason they bought Calibre, really. It's low all-in sustaining cost mine, but this is the total of what they're expecting 2026 to bring now. So we kind of, I had a reasonable guess at the gold production. Sort of they were looking, I thought, at 1 million ounces, and now they've sold the Brazil operation. They've given a consolidated 700 to 800,000 ounces of gold production, which, they were talking about 1 million without caliber mining not so long ago. So that was including the Mexico mine, Los Filos, that is shut down now, and Greenstone doing a bit better. So yeah, then they got to 1 million, revised with the caliber acquisition, and now selling off Brazil, we're back down to, let's call it 750,000. So again, I sort of mentioned last week that was part of the reason for selling a little bit. But I thought part of the reason for selling off Brazil was to get this all-in sustaining cost down, sort of closer to $1,500. Again, they'd said a little while ago, or show in the presentations, that this would be 1,500, in the near future, and they're now saying guidance for the whole of 2026 to be, let's call this $1,825. So it's quite a poor all-in sustaining cost, really. Cash cost is sort of closer to where we thought all-in sustaining cost would be. Still, growth capital, $350 million. That's quite a lot to be, spending on growth. Exploration, $75 million, and general and administrative, $85 million. So yeah, I thought all of these figures basically were not what I wanted to be seeing. I was kind of hoping for, fair enough, if it was going to be 750,000 ounces at $1,500 all-in sustaining cost, I could probably live with that, and I would just carry on with my holding and sort of let it run a little bit longer. But $1,825 I thought looked pretty poor. So this was their presentation that they sort of put up in September 2025, so just 4 months ago. And if you sort of scroll down to one of their slides, I mean, you always wonder whether to sort of take too much stock in these presentations. They might be sort of very, very rosy and painting the best side of it, but they shouldn't be, outright lying. I guess things change sort of from month to month, but yeah, we had this slide, showing near-term production and cash flow growth, and they show obviously production 2025 estimate being, about 800,000. 2026 estimate was sort of, this is based on analyst estimates they put, not on Equinox Gold's estimates themselves, but they've put it in the presentation, so it is somewhat endorsing it. And yeah, 2026 they were sort of showing about 1.1 million ounces. We're now, admittedly with some sales, going to be getting 750,000. And 2027 they were sort of showing about 1.2 million ounces. But it's the all-in sustaining cost, I think, that is, more telling. They were showing, so just 3 months ago, basically a touch over $1,600 all-in sustaining cost, and then coming down to sort of 1525 maybe, 2027, and we're, going to be at 1,825, so about, about here. They haven't really obviously given anything for 2027, but, to be quite so high just 4 months later, I do think is quite poor. And operating cash flow, this was sort of based on lower gold prices, so I suppose it might actually be somewhere near there. But yeah, I just thought for such a short time to have changed this much seems quite poor. So yeah, based on this, I just don't see as much upside as I do with other miners, not just B2 Gold, some of my others, Pan American Silver, and even Coeur Mining and Fresnillo. Even though they've done pretty well, I still see potentially more upside with them rather than this sort of with this being the last straw basically. There was sort of, and especially based on gold price. I got a comment on last week's video about sort of what I'm looking for in these miners, and I sort of said back when we were at much lower gold prices and you were getting gold price sort of maybe $500 above all-in sustaining cost, you would look for a lower all-in sustaining cost. Really, the sort of high cost miners aren't exactly making much of at all, and sort of just being $400 or $500 lower all-in sustaining costs, suddenly you make a fortune. But now we sort of rocketed up to the dizzy heights of $4,500. Whether you're sort of $1,800 or $1,500, it doesn't make a huge, if your costs are here or here with gold price up here, doesn't really make all that much difference. So I basically just wanted ounces on the board now with gold prices where they are, and Equinox are selling theirs off. But I suppose all-in sustaining cost does still make a bit of difference, and I'm just not happy with Equinox's continued sort of putting out optimistic numbers and then not meeting them. Basically, I did sort of note this presentation from February as well, going back to not even a year ago when they were talking about greenstone being 390,000 ounces a year, and they sort of dropped that to 330,000, and at the moment they're sort of not at 300,000 for a projected year yet. So yeah, just continued bad news, and other miners are delivering. I would say B2 Gold at sort of $1,500 all-in sustaining cost in the most recent quarter, and they were just below $1,500. So yeah, they're putting up solid production and solid costs. It's just the Mali risk which is out of their hands basically, whereas Equinox, everything pretty much is in their hands and they're just painting a rosy future. So, economic news, the investing.com sort of list has changed in look quite a little bit. And yeah, we got US inflation numbers for December. Headline CPI on target for the monthly and the yearly, 2.7%. But core CPI was slightly lower than expectations. Same as last month, 2.6%. So that was quite good news. There wasn't a huge amount else really. You got some sort of PPI numbers and things. That was November, new home sales. GDP now is still sort of floating around the low to mid 5%, sort of based on their trade deficit coming down. And yeah, UK GDP numbers sort of slightly better than expected, but not exactly great. 1.1%. What is it? 0.3%. I think it was 1.4% for the year. So not a huge amount of growth. That is after inflation, of course. And US job numbers quite strong, or jobless claims all sort of lower than expectations. So yeah, the January rate cut is basically off the table now, and I think CME FedWatch is not pricing in a rate cut until after Jerome Powell leaves. They're sort of saying June is basically looking like it. So portfolio-wise, we have the sort of top three here, as seems to be the case every week. Swapping around, Coeur Mining has taken the lead again, ever so slightly. Fresnillo number 2, and KGHM drops to 3. Applied Materials, though, putting in a pretty strong week, 8.7%, and is sort of on the heels of it. in third place. So that's pretty good. As I say, sort of some moves elsewhere. Equinox 13% down. That is quite a drop. I think I did sort of sell at a slightly better time than this, so took some profit before this drop. Obviously, I don't want to see them fall. I still hold quite a lot. Crypto miners, we have started to see a bit of a push. Nearly 26% for iron. I would have been a little bit better off holding on to my call options rather than having the stock, but I still do get a reasonable gain, and the stock is now 34% in the green, so not even held that for a month yet, and 34% in the green, pretty good. Some sort of gains elsewhere. Hive Digital is up 12% for the week, so that's looking pretty good for the stock, and for the options as well. 31% up on my options. Some of these have expired worthless now, mid-January. So yeah, the 9,000, 34% gain isn't quite true. I've just had £10,000 worth expire worthless. So yeah, it's not quite as good as that, but there you go. And Equinox down 22%. So this isn't quite down 22%. I've taken about 32 grand profit out of those, and just got that sat as cash at the moment. I was sort of intending to deploy some of it into Hive and B2 Gold options, and maybe sort of some elsewhere, but prices didn't sort of align to where I wanted to buy, so it's still sitting in cash. But yeah, B2 Gold sort of increasing a reasonable amount, 24% in the green now, and maybe I've bought all I can, and they will continue to go up. I don't really fancy buying too much more at current prices, so unless they come back down, I may be done buying. And sort of similar with Hive now. Fundamentals starting to look a little bit up. Bitcoin difficulty looks like it's going to be coming down, so that improves costs, and Bitcoin price sort of increasing. Again, sort of Hive now starting to go beyond the price that I want to buy options for, so we'll see. And yeah, on the ETFs, not really a huge move in anything. Bitcoin and Ethereum up 4% and 5%. So interesting week. 3.6% up in total. Looking pretty nice. Let me know how you guys are getting on. If you're buying and selling anything in these volatile times, and like and subscribe. See you soon.